everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. Well, I'm back to talk to you again so soon because pretty much everything we talked about happened today in one day. So I don't think a whole lot of additional commentary is needed in this recording, so let's just get to the charts and see where we go from here. So as I mentioned in the intro, the target that we talked about last night was hit today in a huge down day. I'm sure everybody's well aware of that at this point. And that's the previous wave 4 target from the Elliott Wave pattern, the large 5-wave pattern where we had this 4 low that occurred right at the beginning of June, started the wave 5 run. And if you know anything about Elliott Wave patterns, if you know the 5-wave patterns, once it ends, then you retrace back to the previous 4. And that's exactly what happened. Now, it doesn't normally happen quite this fast, but that's expected. That's what's supposed to happen. And check out these prices. The low of the price back on the 3rd of June was 273.09. The low today that we hit was 273.50. So right down to that level, within 50 cents of it. And then we bounced just a bit. The futures are up a little bit at this point in time. Entitled the presentation last night, Katie Bar the Door. You heard me use that expression before. And let's hope Katie got the door shut, because if this level doesn't hold, we're coming all the way down here. And that's where the Katie Bar the Door thing comes from. If we don't hold here, it gets real ugly again, because there's just no support in the way on the way down. Now, the things that we do have that are positive is we have a big gap here that occurred today, another gap here, and then there's the 10-day moving average. So we're grossly oversold at this point in time. And wouldn't it make sense to come back up, fill this gap, fill that one, and then get back to that 10-day moving average? All that stuff could happen all at once, right around 300 on the SPY. After that, we'll have to wait and see. But I mentioned previously, even with this earlier damage that was done, that there'd be some backing and filling going on, and that's what was occurring. This is what I meant by that. We moved up, we moved down. This is backing and filling. We were kind of going sideways, trying to stabilize a little bit, and then we got hit, or the market got surprised over the weekend with the news about oil. I'll show you the oil charts here in a second. That was unexpected, and then that just broke what was being worked on. So we'll likely see something along those lines again. So if we can get this wave 4 pivot point to hold, then we close this gap and this gap, and we go through and do some back and filling, build a little bit of support, and maybe that we can launch and try to move back to the upside from here. Hasn't been a tremendous amount of damage done to our economy yet. But a lot of companies that do international business are going to be struggling. The president came out today and said there's going to be some fiscal stimulus that's being talked about. We'll see what transpires from that. Looking at the VIX, last night we mentioned that the VIX hadn't really reached one of those panic levels yet, like it did back in 2008. We showed you the level where it hit 90. Well, it didn't hit 90. We got up to 62 today, but that's the highest level the VIX has been since, guess when? 2008. So we did get a bit of panic this morning, enough to where we actually shut the market down. I mentioned last night the futures were limit down. They tried to open them once, couldn't, and they just kept them shut all evening. Then we get to the market open. The futures go limit down at 5% drop. The S&P, the circuit breakers kick in at a 7% drop, and we were open for all of 3 minutes. Before we hit that 7% level. The market was closed for 15 minutes, and then we reopened and stabilized a bit, even though it was a pretty nasty day all the way around. Talking about nasty, look at this oil. Here's that big move down in the USO, the ETF on oil that's fairly liquid. And boy, it looks like we're going lower here in this pattern, but we have a huge gap here and another one there. So there's gaps to be filled. And again, we are way oversold with the price of oil. If you listen to Saudi Arabia, they blamed it all on Russia. Russia obviously doesn't say that, but when you take a look at the price of oil, the actual price, look where we came down to on the light crude, down to a low of 27.34, and we mentioned $35 was really, really important. Some were saying $40 today, and we needed to be at least 40. Some even said 45 for the U.S. shale producers, the fracking. But this will, if we stay down here for any period of time, and it's been a long, long time since oil was down this low, but if it stays down here for very long, that will put a lot of the U.S. Shale producers out of business. They just won't be able to survive selling oil at that price. But again, a big gap here, and we'll see how that doesn't happen very often in oil, where you get gaps like this. We'll see how it plays out, but according to the Elliott Wave chart, again, we may get a bounce, but it doesn't look like the lows are in, and that's not good for oil companies, not going to be good for the economy. It'll be good for consumers, obviously paying less at the pump, puts extra dollars in consumers' pocket that hopefully they'll spend in other areas. So maybe the services industry gets a little bit of a bounce. It's just a little too early. There's so much damage to see how this plays out over time. But I wanted to show you that on how low the actual price of oil went. So the key will be, how long do we stay down here? Do we get a snapback rally? Do we do some back end filling here? It's just it's hard to tell. Does OPEC and Russia back off a little bit with this hardball game they're playing with pricing? And we'll just have to wait and see. But main thing I wanted to show you was the follow through from last night, and the fact that Elliott Wave 4 target hit dead on the nose today. And again, let's hope that's a good, strong target for those that are long the market. So just want to get back to you with another update. Hope you're doing okay. Stay safe. Talk to you again soon.